This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the first week of May 2023, a week that we knew was going to be busy. All sorts of economic data, all sorts of worries about the banking crisis, a Fed meeting, and then the BLSBS at the end of the week. Would we end up with a green candle or not? Well, we'll see by the time we get to Friday. On Monday, the 1st of May, we took a look at a number of charts, the main one being the chart of the dollar index. Was it putting in a rounded double bottom and beginning to break out? That was an open question. And then one of the things we discussed Monday, May the 1st. Okay, here's the only chart that gives me pause. All right, you listening? It was the only thing that could muck it up for the next couple of months. It's this chart. Remember how many times you heard me talk about a classic topping pattern is a double top with a spike, a pullback, and then a rounded second attempt to get higher. Right? You see it all the time. You see it at the bottom. Classic double bottom. Spike low, a rally, and then a rounded low. Uh-oh. You see that on this dollar chart? A little breakout, a little downtrend today. Now look, if we continue to rally later this week, and we finally get gold down to 1960 and silver down to 2450 or something like that, which has been our target now for over 2 weeks. If that does actually happen, it's because the dollar rallies to about 103. And why would it stop at 103? For the same reason it stopped at north of 103 back in March, because that's where the 50-day moving average is. If you want to get problematic, we get through the 50-day moving average and we go back toward 105 or 106. Now, I suppose you could come up with a scenario where that could happen. I don't think it's going to happen. It's unlikely. But I think we have to be at least on the lookout for that. Tuesday, May 2nd, brought a return to very, very sharp concerns about the U.S. banking sector. These reckless rate hikes the Fed has pursued for the last 18 months have put a lot of banks, particularly local, regional, and commercial banks, in financial jeopardy and subject to deposit runs. The bank indices that you can follow, if you want to call them that, are the big ETFs. And we took a look at both of the big ETFs as part of our podcast review on Tuesday, May the 2nd. First one is a daily chart of the KBE. This is the bigger bank ETF. Remember we had something similar to this from Sven Henrik last week, right before all hell started to break loose? Okay. Classic formation. Plunge down in March. Bear flag for 6 weeks? And now breaking down to new lows. That's terrible. Look at it on the weekly chart. Again, same flag, breaking down. Now, there's 3 days left in the week. Maybe it'll completely reverse and be up to 38 by the end of the week. I don't think so. Starts breaking down here. Starts moving below 34 to 32. We're going to be targeting 28. Oh, good heavens. Now look at the next one. This is the weekly chart of the regional banking ETF, the one that mentioned all 144 stocks in this thing were down today. All of them. Same flag, Plungerama from 65 back in February. All the way down to, what did it get to, 40? And then flag, this is a weekly chart, flagging sideways in this little wedge downward, and now totally breaking down this week. Again, it could recover. Sure. Anything could happen. But holy smokes. That's an ugly chart. Sure doesn't look like it's getting any better. Wednesday, May the 3rd, brought the conclusion of the latest FOMC meeting, where the Fed hiked another 25 basis points, as if there's nothing going on they should be worried about within their banking system. And gold followed what has become the trend as of late during these FOMC days. A little rally with the Fed lines at 2 o'clock Eastern, a dump into and through the beginning of Powell's press conference at 2:30 Eastern, and then a rally while Powell tries to flap his gums through a press conference. That's what the pattern has been of late. That's what the pattern was with this Fed meeting as well back on Wednesday the 3rd. Here's gold intraday. You can see how this works. This is like I mentioned earlier, this is the pattern. At the Fed lines, a big spike, okay? And then an immediate reversal. These are 5-minute candles, falling to a low just as Jerry's getting done. That 1:30 candle is from 1:30 to 1:35. That's the time Jerry has his prepared remarks, okay? Central Time. And then as soon as he got done with gold at 2026, rally. All through the period he was talking, and then after he got done, it rallied even further. Again, as gold was apparently sniffing out this Pac West stuff. He said it's now officially, Globex is officially closed for an hour. Gold out at 2048.70. Holy Toledo. Gonna have to watch that tonight. One of the charts we were sure to discuss on Thursday the 4th was a chart of COMEX Digital Silver, the daily chart. Silver closing at its highest close of the year thus far, well north of $26. Looks good, made a higher high. However, there's been a lot of open interest coming in. Of course, we got the BLSBS jobs report coming for Friday. So we'll have to see if silver can hold those gains through the end of the week. However, it's always nice to make a higher high and a new high of the year, and that's something we discussed Thursday, May the 4th. Silver on the daily chart. I thought I'd give you the moving averages because we've been talking about this for a couple weeks. Maybe tomorrow or Monday, we're going to get that red line to cross up bullishly through the green line. That's the 50-day moving up through the 100-day. And as we go forward, that is a bullishly stacked, beautiful looking bull market chart. Higher highs off of higher lows. All three moving averages bullishly stacked, 50 above 100, above 200, all of them trending higher. Looks great. Highest close of the year today. And again, glowing out at its high of the day as well. If they pull back tomorrow, we'll look for support initially at 26, but maybe above 25, 25.50, something like that, 25.60. If they come and smash us. But even at that level, we'd still be up 50 cents on the week, which is 2%. We'll just see what happens. And on Friday, your latest edition of the BLSBS, what at TFMR we call it the BLSBS. It's actually the latest jobs report from the Bureau of Labor Statistics. It's a statistical joke, and it has become a political plaything, actually beating expectations now for the last 13 months in a row. Totally unprecedented. The longest streak in the past was 3 months. Through tricks like the birth-death adjustment, which magically adds jobs, and without which the report would have been sharply below estimates. The market takes it seriously, though. The machines chase the headlines, sell off bonds, buy the dollar, and dump the metals. Now, gold had gotten a little overbought. Whole bunch of open interest came in on Wednesday and Thursday that turned around and got flushed right back out. That's normal bull market trading, and that's how it went Friday morning. Now, of course, the lows of the day were put in right at the London PM fix, 10 o'clock Easterns. No surprise there either. Then prices rallied. Gold finished above 2,000 on the week. In fact, the highest weekly close of all time based upon the continuous weekly nearest chart. Silver finished strong too. So get ready for a big week next week with the latest inflation data, a whole bunch of Fed goons. It's going to be a busy week. Come join us at TF Metals Report to stay on top of it and ahead of the game. TFMetalsReport.com. Thanks for listening and have a great weekend, everyone.